Welcome to Insider Week. Great to have you here at our trading report this week. Before I start to discuss our results, I want to warmly invite you to our free webinar, which is going to be held on Tuesday, the 7th of June. Join us at 6:30 p.m. London time and get to know our trading opportunities for the month of June. Additionally, you can ask all your questions about our trading opportunities as well as our coaching program to Philip, who is going to be your coach at Insider Week. He's the guy from who you will learn our trading strategy as well as our entry patterns, risk management, and all that counts for your trading plans in the future. Use the link below this video to register for the webinar on Tuesday. Let's get back on track and discuss the trading results for our commodity and futures trading according to COT data for week number 23. In week 23, we had a total loss of $22,984. That's a huge loss because it was a difficult week. That's part of professional trading, and in this video you will learn how we handled it. Let's start with our COT strategy. We started into the week with an empty portfolio. As you can see, during the week we opened one position, and at the end of this week we have that position in our portfolio still, and it's 17 short contracts in sugar. Let me show to you the reasons for the sugar trade. On the weekly chart, you can see our buy and sell signals in sugar. We derive our buy and sell signals from the COT data that is freely available for professional traders like you and me. You can see that in sugar a resistance level was formed, and at that resistance level a lot of sell signals appeared in the past. Because of that, we decided to take a short trade. On the quarterly chart, you can perfectly see the resistance level that the price is currently at, and we can see that the price could move to the level of 10. On the daily chart, you can see that we planned our entry. We were triggered on Thursday. The price moved first against us, and then it turned around and moved into our direction, and there was a great sell-off day on Friday. We are in the market with 17 contracts, and we wait for the price to fall furthermore. Now let's have a look at our champion strategy. Here we started into the week with 3 open positions, which were all in the loss. We had positions in cocoa, in gold, and in lean hogs. During the week, we closed positions and we opened new positions. And in this week, we made a total loss of $22,984. Let's have a look at the trades that led to this result. The first market is cocoa. And cocoa, as you can see, is a difficult market. It's a range market, but we tried to trade it. But we were not lucky and we were stopped out with a loss. The next market is gold. In gold, we've bet on a trend reversal on the daily chart. We wanted to see an increasing price trend. As you can see, on Friday, volatility hit us hard and stopped us out. So now gold is not interesting to us anymore because it's currently in a range market. The gold price must move out of the range to be interesting to us again. The next market is lean hogs. This is the market where we are currently not lucky in. We were stopped out twice in this market. The market is currently in a range and it doesn't show a clear trend. Thus, it is not interesting to us anymore. In soybean oil, we can see on the daily chart that there's a strong uptrend in the past. We tried to speculate on a trend continuation to the upside. First, after we were triggered, the price moved into our direction, but then price fell and stopped us out on Friday. We will observe that market very carefully, and if it turns out that this is only a correction, we will be interested in re-entering this market. The next market is feeder cattle. We have an open position in feeder cattle. It's a long trade with 9 contracts. We've seen a trend reversal to the upside in the last week, and we can also see that COT data indicates that this market is going to show us an uptrend furthermore. Because of our expectation, we are in the position with a long trade and we expect our target price to be reached. And then there's another position in gasoline. We have a long trade in this market as we've seen a strong uptrend in the past. However, if one trades this market, he has to be aware that this market is currently quite overbought. We currently can see that the price is moving around the last high. A trend reversal could happen, and because of that, we kept our position quite small. We only have 1 contract in this market, and we are still in that position. Finally, let's have a look at our weather trading account. In our weather trading strategy, we combine fundamental weather analysis with COT data to make profitable trades. In our portfolio, there are currently several stocks that we are trading, and in this week we didn't realize any gains. 2 of our stocks are based on the hurricane season that is currently in the United States. On this chart you can see that the amount of hurricanes at the moment are above the average. We are trading currently two stocks which you can see here. This one is SWN and this one is RRC. And compared to the S&P 500, we can see that these markets show relative strength. We now have to decide whether we want to protect our accounting profit by moving our stop loss very close and probably get stopped out and thus realizing our profits, or whether we want to stay in the position and exit it in the end of the third quarter, which is in autumn. Our second trading idea is based on the drought period that we are currently seeing in the United States. As you can see, we selected 3 stocks and these were currently drawn down by the overall market performance. In this chart you can see that the companies will release their second quarter reports in the end of July or the beginning of August, and this will be our intermediate stop. We will see whether everything is going according to the plan once the reports are released. And once our fundamental analysis is confirmed, we will keep these stocks in our portfolio until the end of the third quarter. That's the plan for our stock portfolio. Our third trading idea in the weather trading account is based on chlorine tablets. Based on our weather analysis, we assume the demand for chlorine tablets for swimming pools to increase. For that, we selected 3 stocks that you can see here, which we put in our portfolio. As before, the stocks were drawn down by the current market phase. We also used the second quarter reports to see whether everything is going according to the plan. If the intermediary results look good, we also keep these positions until the end of the third quarter. Now let's have a look at the CRB index as usual. That's a commodity price index, and as you can see, the index made a new high in the last week. And that's why we continue to focus on long positions in our portfolios and on our watch list. That's it from our side this week. Please don't forget to register for our free webinar on Tuesday. Additionally, write us in the comments what you would like to know in the free webinar. What would you like from us to be discussed? You can find the link to register for the webinar below this video. Please, if you like our analysis of the markets based on COT data, give this video a like. Thank you very much for that in advance. And if you don't want to miss out on future videos about commodity and futures trading, don't forget to subscribe this channel. It's highly recommended. Thank you for your attention, and we wish you good preparation for the next trading week. And as always, especially in these volatile times, be aware of the risk, because risk management is the key to success in trading.